there's a lot of exciting things that won't all be how we do business in the future. So you've got usage-based insurance, so pay per mile, pay per item in your home. You've got continuous underwriting products, so constantly looking at your risk and adjusting. You've got microinsurance, which might be a very small point of sale product or just covering one thing. I mean, you've got point of sale insurance, something that you're buying along with the purchase. The most obvious example being flight insurance. You buy it when you get your flight. You've got your parametric policies, so it's trigger-based policies, which we've always had, but we're seeing more examples of that. You've got gig economy policies, hybrid policies that are sometimes personal. And so I think these are really interesting ideas. Some of them will become more important and some of them will remain forever niche.
That's Jeff Goldberg, and this is the future of insurance. This episode is brought to you by Medallia, the market leader in customer and employee experience. Their award-winning SaaS platform, Medallia Experience Cloud, makes all your other applications customer and employee aware. Medallia uses proprietary AI and machine learning to reveal predictive insights that drive powerful business actions and outcomes. Leading insurers like the Hartford and Farmers use Medallia to reduce churn, turn detractors into promoters, create in-the-moment cross-sell and upsell opportunities, and drive revenue-impacting business decisions. Learn more at Medallia.com.
Jeff Goldberg, thanks for joining me for the discussion today. We were just going hard. I should have been recording the whole time. So good morning, but I want to step back to this really great point you were just making. Let me kind of non sequitur for the listeners, but it was brilliant because you summed up in a sense one of the major hurdles that I was talking about in my first book, which you were kind enough to give some thoughts on. So it's this sort of idea that like every project is a success, right? The press releases go out and everyone's praising it, and maybe people get a special mouse pad with the new system logo on it or something. But then you go around to a lot of carriers, and not every system, but a lot of the systems or the projects, people are unhappy about it. It took so much longer. My joke is like you're in year 8 of a 3-year implementation project, right? So over budget, under scope, over time. And it's painful. So how do we have like all this like great, we got the system and the providers putting out the press releases, so proud of the implementation, yet under the surface there is a lot of pain and it's not what people signed up for. Why is this the case? Why aren't we having just honesty about like, look, this didn't go well?
Yeah. So there's a real issue in the industry where we don't have a good reckoning with difficult projects. I don't mean failed projects, which become they're their own thing, but projects that went live over budget, over time. The problem is that it's in no one's best interest to make that statement publicly. The vendor of a project like that wants to talk about it going into production. They want the positive PR and the case study. The technology leader doesn't want to lose their job, right? A bad project is a great way for a CIO to get fired. And the business leaders and the CEO, they are now responsible for getting their teams to use this system. And change management to adopting a new system is hard. And it is way harder if you are then saying this project was a disaster, now everybody use it. So it's a sunk cost. Everyone's in. Even if you're unhappy with the results, you have to keep moving forward. And that means the vendor talks about how great it was, the IT leader talks about how great it was, and the line of business leader talks about how great it was, because you have to. And that unfortunately means we don't do any kind of post-mortem assessment of how projects went wrong and why, and we just kind of keep moving forward. And part of that is because these systems are here now for the next decade or so, and this group of people who put it into production might not even be around for the next one. So the postmortem isn't going to help them anyway. So it's not to say all projects are struggles, but the ones that are, we really should be doing a better job of establishing what the goals were, how those goals weren't met, why they weren't met, how insurance organizations could do better next time. And unfortunately, without that, we repeat this over and over again.
Yeah, I mean, I think you're spot on. What I'm curious about is, do you see the same problem on the provider side? Like for those the companies building the systems or maybe the implementation partners, because they're going to go on and do another one, right after this one. So are they doing postmortems on it, even if they're not talking about it publicly? Are you seeing them learning from, why was this one difficult?
Yeah. So they are aware when projects are difficult, especially, I think if the client doesn't complain, a lot of vendors will say, "Oh, it took twice as long, but the client seems happy, so we're fine." And so I don't want to. There's no universal here, but I definitely see different vendors have different levels of skill when it comes to project management. And in fact, at Novarica, when we are talking to insurers about which system they might want to use, that is one of the things we will. It's not even a warning, but we'll tell an insurer, "Hey, if you're going to work with this vendor, you need to really be bringing your own senior project managers and be on your game, because that's a lack at this vendor versus other vendors have a very robust project management operation internally and will actually drive things." And that can make or break a project, or that can make or break a project hitting its timeline and cost. Right? It's not so much, but although frankly, when you look at failed projects where the plug is pulled, it's still often project management. It is not necessarily that the system couldn't support the business. It's that the insurer wasn't putting in enough resources and the vendor didn't have the project management maturity assigned to the project, and that's where things fell apart.
Yeah. So you're trying to add that kind of eyes wide open about the full picture, not just, you had the 2-day demo. It handled all the requirements that you gave it, job done.
Yeah, exactly. I actually think those demos are important, not for falling in love with the system, but when you look at 3 different core systems, you send an RFI to them, you spend days doing demos with them, and then you choose the one you think will be best supporting your business. One of the things that you've actually done during that process is proper expectation setting, right? If you only ever look at one vendor system and choose it and go forward, then as an organization, you probably are going in without a full realization of how difficult this is going to be. And the reality is, no matter what system you choose, there's going to be gaps, there's going to be workarounds, things that doesn't support. And if you've looked at 5 systems and narrowed it down to 3 and then chose one, you kind of know, oh, every system out there is going to have these holes. If you just chose one system, you probably barreled forward with the belief that this is going to be the perfect system to you. And then when the first time you hit a gap, you're mad. You're like, oh my gosh, I can't believe it doesn't do this. We made the wrong choice. And I actually think that kills a lot of projects too. As a vendor, if you know the insurer that is choosing you has not considered other options, that is actually a red flag that I would be wary about. And you need to make sure you're putting extra time into. I mean, it's kind of a hard thing for a vendor to do, is to talk somebody out of choosing your system without comparing you to other people first. But those are red flag projects. Those are projects that are more likely going to have problems than a project where you've been part of a selection and you know that this insurer has already done requirements gathering, has done kind of a market assessment, and come to you with a realistic view of what the world looks like.
I think that's a really great point for any providers or startups listening to take in. I lived that, where it's like you think you're the only show in town, then you find out they're going to do an RFP process and you get scared. But several other companies that I'm working with as an advisor, they're like, we're happy to go against competitors. We feel confident in what we're offering, and if we're not chosen, we probably weren't a fit for that carrier's needs anyway, and we were reaching. So they're comfortable enough with their ability to compete, but I saw it firsthand. I talked about it in one of the cases in the book, the one on High Marley with Ohio Mutuals. They had been through the dance with a number of others. They had a few tried, failed implementations or pilots. And so I remember in the first demo to them, like, they didn't ask any questions. And we came away being like, that was weird. Like, were they just disinterested? And in talking to them afterward, they were like, so because we had been through this, we had like 2 pages of grilling questions we wanted to ask you, but in your demo, you naturally hit them. And so we were left at the end be like, oh, we don't even have to ask because, like, they took, and obviously there were questions later and lots of back and forth, but it was a warning sign for us that maybe like, oh, they're not interested or they just wanted to get through it or whatever. But for them, it was sort of like they were ready because of everything they had been through and they knew what to look for specifically.
Right.
So they were, even though it didn't feel that way to us, they were actually more primed because they had been looking around. Turns out for like 9 years or something.
Right. Yes. Yeah.
Or like handing a BlackBerry around to different people to share a texting number so they could actually text with customers. All right, let's get back on track. But so you said something. Yeah. So for the first book, I interviewed you, I think in December 2019 or maybe January. It was like January 2020. So it was before the U.S. started lockdowns.
Right.
The coronavirus was out there, but it wasn't what obviously what it became, but it wasn't something we even knew for certain was going to hit the U.S. or hit it the way that it did. Yeah. So you're making predictions and points about CX, which I feel like the industry really got religion on last year.
Yes.
And your point was it had historically been relegated to kind of claims and billing. So like almost the self-servicey kind of things or the getting service on your policy rather than thinking more holistically. But that was before 2020.
Yep.
We go into that year and to keep the lights on in claims, in billing, in some other places, you had to invest in customer experience. You had to digitize or you don't do business anymore. And I know some carriers who are like, well, we're going to wait and see what happens. And then it's like, so you have no new business the whole year.
Right. Yeah.
Where do you stand on that sentiment today after the investment and the digitization that went on in the past year? Do you still see the same need? Is it still, they're still only thinking billing and claims? I'm kind of curious, like 12 months-ish later from when you said that last time, what's your take on the CX question for the industry?
Well, the first thing I want to say is that there is a difference between CX and digital strategy. Yeah. A lot of insurers invested in digital channels and digital operations, but didn't necessarily invest in customer experience. Those are obviously very tightly related, but supporting a web submission of a policy doesn't mean you actually thought about, you brought in designers and experience engineers to make it a smooth process. It might just mean you put up a website that is not much more attractive than the forms that you had been previously providing. Yeah. So I think, and the reason I want to make that distinction first is because when we think about how the explosion in investment in digital in the last 12 months, a lot of that was what is actually different than what we had been talking about before is that a lot of that was investment in internal digital experience because suddenly all these insurers went into a remote work environment and you had these companies that had maybe been investing in digital channels for their external partners and had, we talk about, we're mostly straight through processing, right? Well, mostly straight through processing is not straight through processing. Yeah. And that means when all your people are suddenly spread to the winds and working from home, if you had a mostly straight through process that required some paper shuffling, well, that doesn't work anymore. Yeah. And so suddenly digital investment started to include internal process, not just external channel integration. So that being said, I don't know if we actually, the last 12 months have really been a upswing in consumer experience so much as they have been in making more channels available and obviously digital channels, which is obviously a better experience for the customer. It allows them.
It's not what you were getting at.
Right.
It's not this transformative moment where like Netflix, Amazon, name your insurance company, they all feel the same to me.
Right. Yeah.
Right? They still don't.
Yes, exactly. Right. And so I still think there's a lot of work to be done to really think about how do people want to work with you? How do you want to engage the policyholder, the agent channel, all of the third parties that you're working with in a way that is just a positive experience. Instead, what we've been focused on is making sure it's possible to work with those channels in a digital way. And that means, tons of investment on digital communication, tons of investment on digital payments, right? Both accepting payments and sending out payments, because lots of insurers discovered in 2020, they very quickly were able to shift to a work from home model, except for the people who had to go into the office to pick up and deposit checks or print and mail, right? Yeah. So can we get that digital? So and is that better customer experience? Yes, right? Is it what we really were talking about last time? Not exactly. Only a part of it.
I feel like that's still about table stakes.
Yeah.
We talk about equalizing the way everything else in your life works. I mean, you think about the utilities that power and fuel your home, which are, in some cases a century old, like insurance companies, and their systems are from the 1960s as well. Yeah. They're all web enabled. They're doing e-billing and all that since the 90s or maybe early 2000s. So it's even that is just catching up.
Yes, I agree.
In a lot of these places.
And to the point where I think it's important to realize that the pandemic didn't, at most, accelerated that, right? This was obviously happening, right? Yeah. We were talking about e-billing and digital payments and digital claim submission before. It's not like COVID made that important. It just meant we couldn't put it off anymore.
Jeff, you had talked about something else that was really early days kind of brewing, but this notion that it's actually late in the book when we're talking about the predictions going forward. You talked about, what about that day where cars are more autonomous, or the OEM, the car brands are trying to direct more of what's going on with the repair process. And Audi's been doing this already to an extent. So who is your auto carrier? Are they just capacity? All the brand investment going on, where does that stand? You were sort of saying, it's not there yet. So it's not like all of a sudden you need to dump your auto business and rethink your entire strategy, but you should be thinking about what does that mean for you as a brand. Do you have any thoughts on that, or is there anything you're seeing that's bringing more clarity to that question? Because I think maybe it's 20 or 30 years out or more or less, who knows? But at some point, this will be a front and center question for us.
Yeah, I think a couple of years ago, we actually thought self-driving cars were going to come much sooner, right? We kind of went through this little wave of oh no, that's 30 years out. And then suddenly everyone's saying, oh my gosh, that's 5-10 years out. Right. And now I think we're almost back into, okay, wait, that's a little farther out than we realized. And to the point where a couple of years ago, you saw insurers who had primarily personal auto books trying to diversify and bring in small business insurance and as a way of hedging against the loss of future auto business, which frankly, whether or not that actually is becoming a thing, I think it was good for the industry. Because auto insurers have a much more mature, straight through processing, automatic decision making built into their organization than small business insurance. And we've seen in recent years much more of that approach be brought into commercial lines. And I'm not saying it's because of the auto insurers entering it, but that certainly is one factor.
Yeah.
I still don't know what the world will look like when you truly have self-driving cars on the road. From an insurance perspective, it does feel like we are starting to see positioning of a recognition that there will be a mix, and so I think the insurance industry is saying there'll still be personal insurance. It'll just be something that's shared. The liability will be shared a little bit more. The issue becomes, what if you don't even own your cars, right?
Yeah.
That is
autonomy. It's the autonomous shared pods that we all climb into.
Exactly.
Pill-shaped looking things.
Right. Which in some ways isn't even about the autonomy. What if let's just imagine that, Uber or Lyft are the only cars available, right? Every single human being, anytime you get in a car, are going into some kind of mega car service company, that would also radically change how auto insurance works, right? So self-driving obviously impacts the overall model and makes, frankly, that outcome more likely. But if every single person still owned their own self-driving car, then I think it would actually be more clear how the insurance would work.
That's an interesting point. Yeah, because I had thought about it as at one point, no one owns cars.
Right. Yeah.
And maybe that is still the case, but it could be 100 years from now.
Exactly. I mean, I don't own a car, but I live in New York City, so car ownership is kind of a pain.
I'm curious about all the New Yorkers who bought cars or leased cars in the pandemic because like, oh my God, I have to get out of here. And I know a few that are like, oh my God, what did I do? Because now that I'm back in the city, I have to park the thing.
Yes, exactly. Yes, yeah. Or alternate side of the street parking, and it's
or paying for a space in a garage, or
which most of the garages are valet, meaning someone else is getting in and out of your car. And if you bought a car because you wanted to avoid pandemic endangered, and now you're still. I'm sure. I actually have not read enough to really know whether there are more cars or fewer cars in the city right now, but I'm sure it's been impacted by this.
Yeah. I mean, there's no question that the driving habit shift.
Yeah.
I think it gave a little bit of a shock to the industry that maybe was a glimpse of what we would have been at 15 or 20 years of autonomy, or whatever it is. Not cars are gone and no one drives, but it's a lot of people who got the little use-based insurance dongles for their car for a few months because their car sat idle. That are now paying a lot less, whether their exposure is still what the that little experiment showed it to be.
Right. Yeah, absolutely. And I also think in New York City, at least, you had a lot of, it's winter now, so not as much, but you had a lot of streets become open streets, blocked off for vehicles, cafes kind of on the sidewalk spilling into the road, and recognizing there was less driving going on and more need for outdoor seating. And frankly, I really like that. It's like, nice. Why shouldn't our cities be a little bit more catering to open air pedestrian traffic and a little bit less catering to vehicles driving around?
Yeah, especially a city that can be as walkable as New York, if not for the constant risk of getting hit by a car. So if they're
exactly. Yes. And I realize sometimes my view about cars is really influenced by where I live right now. It's I don't believe that what would work in New York City would work in 99% of the country.
Right. Well, I mean, I think even this vision 100 years out or whatever it is of like these little pods driving everyone around, go out to the plains, farmer with a pickup truck. What's the autonomous shared vehicle that works in their situation? So there's lots of commercial settings or more rural settings where it doesn't make any sense. I don't think we're necessarily ever going to get to 100% no vehicles until we all learn how to fly.
Exactly. Right.
But that's another story.
And I want to bring up a specific insurer I spoke to who was in fact a rural insurer, and their model, this is pre-pandemic, so it's a recognition again of the need for digitalization before COVID. Their sales model was a door-to-door knock on the door of small farms and sell insurance. And their check, taking method was people would drive their tractor down to the agency and drop off a check, right? Wow. And we were working with them because that wasn't working anymore. People didn't want an insurance salesman knocking on their door. And I mean, I feel like that's probably a universal feeling that you don't want an insurance salesman knocking on your door. And this just happened to be one of the last outposts where that was still the model. And they needed to change the model. They needed to figure out how to sell insurance in a different way, via digital channels, via allowing people to work with them. The person who had inherited their farm from their parents was not interested in talking to a door-to-door insurance salesman. So this is, once again, unrelated to the fact that in 2020, no way is anyone opening the door and talking to an insurance salesman, but that was already the case.
Is that a case for omnichannel approaches? So it's like you can keep that option, but you need to diversify and meet customers how they want to be met, whether it's sales or service, or is that a case of like it doesn't make any sense to keep that capability around, full stop.
Right. I think it probably makes sense to keep a human capability around, maybe not the door-to-door sales. If door-to-door sales is not working, you just need it. You still might want an agency where people can come in and meet with you, or you can still go out and meet with people who've requested that you come out.
But not the random knock.
Yes, right.
Yeah.
So you're still making some changes to your model without necessarily getting rid of the human element.
Yeah.
Yeah.
There's a lot of lines that would not be sold if not for that human conversation. Like, life insurance, annuities, financial planning, those are very heavily like, we need to meet and sit down.
Yeah.
And they've pivoted because they had to, but it's a challenge.
Yeah. And I think we undervalue the importance of the agent as a salesperson, as a customer representative, as an educator. Yes, we have gone to a world where people can educate themselves on the internet. Insurance, some lines of insurance are very simple, some are very complicated, and even the simple lines, sometimes that's just because one line of business is simple doesn't mean that's the only part of your conversation with somebody. Term life, you don't really need a lot of education to figure out how to buy a 10-year term life policy. But is that all you need? Or do you need a term life policy that's bundled with a whole life and annuity policy, right? That conversation is more complicated.
Right.
And most people are not figuring that out on their own.
Yeah. And so I want to talk about products a bit, but I mean, it has me, your comment has me thinking, like, does a move towards pure digital mean inherently we end up with simpler products because we struggle to engage on those nuances that actually would be a better fit for the person? Because when you're at the point of purchase, you don't understand something, you shy away from it. You see a price differential, you can't really understand why it's there, you shy away from it. So we end up with the lowest common denominator of coverage, which may be fine in some cases, but may not be in others. There is a lot of not just system and capability innovation, but product pushing going on of new ideas and ways of addressing it. I'm curious what your take is on that, because it's become much more front and center this year especially, but these things have been going on globally, maybe just not in the developed markets as much.
Yes. Yeah. So first of all, yes, I think the digital channels, the mobile products are in fact simpler. There's a lot of pressure to simplify the product, and a lot of insurers have in fact created different products specifically for the mobile sales channel or the direct sales channel. That's both recognition that you can't sell a really complicated product in some of those channels. You can't ask someone to fill out 87 questions on their phone. But to be fair, it is also recognition that insurers who are selling direct products are trying not to ruffle the feathers of their agent channels too much. And so they can say, look, this is a simpler, lower commission product anyway. You wouldn't want to sell this product. We're still letting you sell the complicated high commission product. So there is a part of it is political, and whether or not it's legitimate, what that message is true, it is still also a political message.
Right.
But I do think you're right that there's also simplification going on for the sake of the channel. And the question then becomes is, which part of that is good simplification? I think insurance products have become too complicated. It's because insurers have started from these big monolithic risks that they're trying to push to consumers and then built the rules around it. That makes for a very complicated product versus a product that it starts from the consumer need and sort of builds up the risk from there. That's a very straightforward product, and that's going to be simpler to sell. So the question is, are we simplifying for the sake of simplifying, meaning start with the monolithic risk category that we want to push, then create all of the sort of rules and questions and sort of coverages and contingencies in order to narrow that risk category to a specific buyer, and then simplify that back to something that can be sold through a channel, in which case you've kind of taken a convoluted approach where you're probably not selling what the consumer needs versus rethinking the product from the ground up. What does somebody really need? Let's just sell them that so that we're only asking those questions and simplifying it. Now that might still be too simple for somebody's needs, right? You still might need to think about the bigger picture, but I think you're at least starting from a much stronger place that is built around the consumer demand and the consumer risk rather than that kind of weird path to reducing questions.
I'm hesitating to say something because I don't want to take us off the product discussion that I want to get into, but it feels like the same thing going on in the system side, where, are you a provider who you have your solution, and so when it comes to a new version or updates, it's built upon this thing you've been building upon for a decade or whatever, or you've started clean sheet with what you think the market gap is, what customers are telling you they need, and design for that. And that's where you see simpler, the whole low code, no code buzzword that is starting from something cleaner sheet that allows for more flexibility around the true needs versus, well, we have this thing and now we have to make it do this too. So we're going to layer that on top of, which is much more complex, harder to update, harder to change.
Yeah, that's a great point. Although often those low code, no code platforms end up on top of a legacy or system. So but you're still trying to simplify a layer on top of complexity. But you're absolutely right? Are you rethinking your whole system infrastructure, or are you trying to simplify something that was historically complicated?
Yeah, maybe that's why we're seeing a lot of software engineers coming into the insurance space, starting some of the new carriers that, they're not insurance people, they're engineers. Because it's still same kind of problem in a lot of ways.
Yeah. Well, and a lot of these startups find that, building a core system just to support one business is actually much easier than,
buying and retrofitting.
Right, exactly. And, you have to wait to see how that system supports over time. And the fact is the core systems that are meant to support lots of insurers are also meant to survive multiple years of maintenance, renewals, rate changes, right? And so if you build your own system and you hard code everything, you can get that up really quickly. But what do rate changes look like? What do renewals look like? How does it work when you want to add a new line of business, right? You have to wait to see how that evolves.
I can't tell you the number of systems I've seen go in that can't do a renewal. And they're like, well, we have a year to figure it out, so we're fine. And sure enough, your first year renewals, if not beyond that, are still new business. And they just figure out, like, we changed the policy number to an R. So we know it's a renewal, but it's not actually renewing. But that's a whole other topic. Can we talk about products a little bit? And then I know I've held you on here for a while, but there is an explosion of all these different ways of thinking about products, micro insurance, embedded, God, I didn't even know. You have more of the names of these things than I can think of. But what's going on here, and what do you see as a trend or an outlook on? Are these going to survive? Where might they survive? What are the unknowns still?
Yeah, there's a lot of exciting things that won't all be how we do business in the future. So you've got usage-based insurance, so pay per mile, pay per item in your home. You've got continuous underwriting products, so constantly looking at your risk and adjusting your similar to usage-based, a little different. You've got microinsurance, which might be a very small point of sale product or just covering one thing. I mean, you've got point of sale insurance, something that you're buying along with the purchase. The most obvious example being flight insurance. You buy it when you get your flight.
It's also called embedded insurance.
Yeah, okay, embedded insurance. Okay. You've got parametric policies, so it's trigger-based policies, which we've always had, but we're seeing more examples of that. You've got ride share, car share, kind of gig economy policies, hybrid policies that are sometimes personal, sometimes commercial, depending on why you're driving your car or why you're in your house, or why someone's in your house if it's not you but a renter. And so I think these are really interesting ideas. And I think some of them will become more important and some of them will remain forever niche. It's the thing about insurance is that it works best when it covers a broad category of unexpected risk. And that means, the whole point of insurance is, okay, great, you're covered, right? You don't have to think about it. It should be kind of a safety net. And microinsurance and usage-based insurance, it is that those products are saying, okay, great. No, let's cover very, very specific risks rather than broad risk, rather than the pool, rather than the umbrella. And that works in some cases, but also it messes up the economics, right? Flight insurance works because most people aren't taking that many flights, right? It's a few flights a year. But if you were flying every single week, you probably want some kind of travel insurance policy that just covers you all the time, right? The economics are going to work much better. If you're talking about, home insurance and renter's insurance, very quickly after insuring a few items in your home, you're better off just insuring the whole thing. Because from an economics perspective, when an insurer sells you home insurance or let's say renter's insurance, because that's about the items, it's like, look, you have all these things in your home, but the odds of all of them disappearing at once are low, right? Yes. And so, there's kind of an overhead that's that cost that you spread across, you deaggregate the risk across all your items, versus if you do each item individually, very quickly that looks more expensive than just a blanket renter's insurance policy. And I think something similar for pay-per-mile auto insurance, right? As soon as you hit a certain number of miles, it's probably just better to get a normal auto insurance policy. So it's going to remain most likely something that is niche for very specific types of people who don't need it, or for specific things that just travel insurance where most people aren't flying enough where it would make sense to have a blanket policy that's always covering all of your flights.
I mean, it's the same thing as like a burner phone. Maybe for different purposes, but if you're only going to talk 10, 20 minutes a month because you live in an area with bad coverage and it's just, then it get the little reloadable phone. Right. But if you're going to do an hour or two a month or more, or, you're browsing, like you get a plan, putting the economics aside, and if you qualify in credit and all those kinds of things, and why you have the phone, which we're not going to get into, but there's becomes a point where actually the traditional product makes more sense, which hits right back to your life insurance point, term versus something more complex. It's a lot easier to understand that in your cell phone. When we turn to insurance, people struggle more to see that difference. So maybe thinking of how do we bridge that understanding gap? And right now we have a great solution, and that's the advisors that are out there as agents and brokers and licensed representatives at carriers, et cetera.
Auto insurance has always had a smaller chunk policy. It's the month-to-month auto insurance. It's typically only something that poor drivers who can't get full auto insurance pay for it because it is more expensive. It also, unfortunately, can prey upon people who have poor economic situations, because the month cost is less than the annual cost, but the 12 times that month cost is much, much more than the annual cost of a regular policy.
Do you know Thimble Insurance?
I do not.
So it's episodic. Okay. So like you're a photographer doing a wedding, you just need 4 hours of coverage, or you're a contractor and you need, you're doing month to month because you don't know if you're going to keep doing or whatnot. So that they're in my next book, and I'm not trying to pitch that, but it's to that point. So if you do the month to month, the first month is more expensive. The second month comes down a bit. The third month until it evens out. So on the whole, the 12 month ends up being the same, but they've loaded more of the administrative costs up front, recognizing that the risk of you attriting means they have to cover that. Actually, they haven't told me this. I know about the pricing, but I'm assuming that's what's driving it, because your risk is your risk. That's not any different. Maybe first month you might get some people who are semi-committing fraud on the timing of when they bought the policy. We saw that in claims. It happens sometimes, but more I think it's that the acquisition and administration of that policy costs money, and so you need to recapture that. Versus in a traditional auto, it was like, my early days in personal auto at Liberty Mutual, it was like a monthly billing fee. And it was like $3 a month if you did the monthly, and if you did the annual, then that's $36 you weren't paying. It's not a huge difference, but you were charged for going monthly.
And so absolutely. And when I talk about the month low, like kind of non-standard auto policies, those are different than
that's because you've got a driving record issue or because of your credit score.
Yeah, but I love the thimble episodic approach, which is taking that into consideration. I mean, that makes a usage-based or micro insurance approach much more appealing, because it allows somebody who really only, I mean, maybe you're an occasional photographer and you have expensive equipment, but you only do, it's really your part-time gig, right?
That's
and you only do, you do 2 or 3 weddings a year for your friends, and you want to be insured. And but that actually supports you, right? Where you really don't need the full thing, but at the same time, it doesn't take advantage of you if you end up using it repeatedly, and your business is growing, or why ever that ends up happening.
Yeah.
That's
great. Jeff, I know I've kept you way longer than and I knew this would happen with us because it's fun. Thank you so much for the thought. I don't want to cut you if you've got like a burning thing you wanted to share, but we've covered some fun stuff.
Yeah, no, I think that, I guess my last words will be, I think all of this happening is great for the insurance industry. And I love the startups that are experimenting with new types of products. In a way, it's an innovation engine for the whole industry, right? And the fact that not all of them will prove out their business model is not a bad thing. And I think the ones that are proven out will be adopted by larger insurers as well. Probably, and I'm sure through launching competitive products, some through acquisition. And that's great for the insurance industry. We have not thought enough when you talk about CX, right? People tend to think about CX as the front end user experience working with them, but this kind of product design built around exploring different ways people might need the product, that is frankly a more important part of CX than just what the end user experience looks like on a web page. So it's really exciting that this is happening.
Yeah, that's really well said. Jeff Goldberg, thank you so much for the time today. It was a lot of fun.
Yeah. My pleasure. Thanks for having me. Always happy to talk.
Big thank you to Jeff for joining and sharing some thoughts on what's going on in the industry and what could be going on. He's always been a great guy to turn to for ideas like that. Yes, he was featured in my first book, but we actually go back a few years before that where we got to work together on some projects. And then I got to know him and the team at Novarica even better while I was on the InsureTech side. Really excellent work that they do, both the engaging with the client side, but on the research side. And that's where Jeff focuses. So definitely check out Novarica. So thank you to Jeff and to the team at Novarica. Thank you to Medallia for making this episode possible. And as a reminder, Jeff was in that first book. Have you read it? If you haven't, pick up the book, read Jeff's thoughts and the bigger context that they're a part of. Just go to future-of-insurance.com. You can get the first book. You can get the second book, all about startups. Jeff was in the one about legacy carriers and sort of setting up the idea for the second one on the startups. Or you can just go to Amazon in any geography and pick it up in whatever format you prefer. Print, digital, audio. Okay, you subscribed, right? Definitely subscribe to the show and tell others about it. And I hope that you tune in next time where we will have another great and inspiring industry leader to share some thoughts about what's going on, where the industry's headed, so we can all take that in and keep moving forward in this industry. Thanks, everyone.